Okay, testing the mic. 1 2 1 2. That's weird. I'm not seeing it. I got it. Okay, everyone, welcome to the Pro Trade Room Plus and the US GDP report. My name is Lee Goldstein, the trading director for 10-Minute Trades. Please remember, I'm not a financial advisor. All the reports that we discuss are for educational purposes. It is possible to lose money trading futures, so trade carefully, please. Okay, everyone. So let's talk honestly about US GDP. This is the news that we're expecting. So there's some news that also relates to what's going on tomorrow with the PCE price index. It's sort of like overlap. There's some information from that report that seems like it's always part of GDP. Consumer spending, retail inventories, wholesale inventories, and the PCE prices. But the big thing that's going to move the market here is quarterly GDP. Today is preliminary data. It's the most important data out of all the three GDP reports. I do want to say hello to folks that are watching us on YouTube. You know, if you want to hit that like button, that would be real nice. Hit that like button for us. So look, I want to say the truth about this report. This is, after doing all the testing that I've done, this is probably the riskiest report right now that we are trading. Every single instrument that I tested whipsaws on a regular basis. We have an NQ setup. I personally would not trade it at the moment because it's just way too whippy. Last month, the trap trade got blown out of the water. And let me show you, I'll show you in a minute. So, I mean, I've been going through all the videos before I got here just to refresh my memory. And almost every single video is a whipsaw. Either the NQ or gold. Bonds have not been moving well enough to trade them. All my testing, extra testing that I did, was whippy. So this is a report that you truly are trading it, understanding that it's a high risk, because there's not a single instrument that has been reliable in its behavior over the course of time. So, and if you understand the report, it makes sense because it's really three reports. We've combined it into one, but years ago we didn't used to do that. We used to trade preliminary GDP as its own report, advanced GDP as its own report, and final we didn't trade very often because it usually didn't have much of a impact. Last month, the GDP was so good, or, you know, maybe the word good is not right, but it was good in terms of economic growth. It was very much above and beyond what they were expecting. And because of that, it blew our trap trade out of the water. And our trap's pretty big on this report. And it kind of delayed and then burst in a real strange burst that put me back in the market with an extra order because both my stops didn't get hit. It was just so fast and so weird that it created chaos with the software. And I made a bunch of money back on the second part of the trade where I had an extra order. But nevertheless, this was still a trap trade that failed because the move was so big. Now watch the NQ on the right. This is the NQ here. Pretty fast explosion to the downside, okay? And you could definitely, depending on your internet, depending on how fast your machine is, depending upon where you're located, you could have multiple people with completely different results taking place on that report. It would absolutely be possible for some people to have made money and other people to have had problems on that event. So that was January 25th. I'll just check any extra notes that I made. And basically, I don't have extra notes. For instance, sometimes I'll note what members tell me happened to them. Well, you could see the crazy, it's insane movement on this report. It's very radical volatility. Now, if you look at December, this is December's report, and we were trading the NQ. And something happened where my trade didn't trigger, which probably protected me from a possible loss. And then gold, I was just looking to see if we could get into a reversal. There was an opportunity, but I was watching the NQ. When it hit that low, it might have been too fast. Let's see. When gold got to the low, there might have been a possibility to take a reversal if you were nimble. Some of these trades, you have to be Superman. No, I think it's going to be, that was not an easy reversal. Hesitating could have put you in the reversal all the way on the green candle, which would have been a lot of problems. So that was not an easy reversal to take. So we could go through report after report, and we're going to see similar behavior. We're going to see changes in direction. I just want to look at one thing again on December. This was gold in December. So that was about a 50 tick drop. It was about a 50 tick drop. And we'll double check our spike sheet. After watching all the videos, looking at all the current recent results on this report, November was a smallish move. So we had huge in January, big in December, big in November. Sorry, November was smallish, and we'll double check with the spike sheet. So the spike sheet is the sheet that tells us how big were our bursts. Yeah, November was only 33 ticks. So depending on the trap, you might have gotten filled, you might not. Probably not, because if you look at all of this behavior, if you look at all the behavior, you're in the 60s on quite a lot of the reports, or at least the 50s in terms of the spikes. And the biggest issue with this setup is its different sizes. You can't trade a 125 tick spike the same way you're going to trade a 41 tick spike. So your decision has to be, if you're going to trade, your decision has to be, how far do you want to go back in time? Okay. 5 months is a pretty reasonable amount of time to go back. If we go back 5 months, we have one anomaly that blew out of the water. Okay. You'd have to have like a 95 tier to survive that. Almost 100. You'd need 100 tier, frankly, 105. So this is a stop out for a trap trade, no matter how you look at it, January. But the previous months, if you have a 40 and a 60, you're going to have a trap trade that works. But if you go back further into the beginning of the year, you really need a 65 and an 80 on your tiers. You need 65 and 80. So the question is, how do you want to trade it? Do you want to trade it? Is this report safe to trade? It's extreme difficulty to make a decision because, yes, you could trade based on the last 5. You have to throw out January, and we would have to you're going to assume if we trade the trap 50 or 55 and 70, which I believe is the current trap, you might get filled and you might not, okay? Because there were 253s and 3 of the 5 were quite a bit smaller. So if you want a chance of getting filled, you could trade a 50 and a 70 with a 20. That would be a possible trap trade that over the course of the last 6 months would have worked 5 out of 6 of those. Okay. Really, no fill in September, no way around that, and probably no fill in November. So 3 out of 6. Okay. So you understand the problem with this report. The breakouts are brutally difficult. Brutally difficult. So you have to just make a decision. How much risk do you want to take on the report? We have a couple of setups, and the setups, without a doubt, you're looking $400 to $500 worth of risk on a gold trap. That's what it would be risking. And then on your NQ, I don't like the behavior of the NQ in the testing. So Roz, anything is a possibility on this report. That's the truth. The truth is, do you want to trade this report? It's definitely not giving you a high probability of success. This report has a high probability of a whipsaw. That's what this report has shown month after month. So me personally, even though of course it could be a good move, the only trade that makes any sense at all to me would be the gold trap trade. So I hate to tell people not to take a trade and then the trade is perfect, right? And then it's absolutely perfect. I hate that more than anything. But you saw the videos. I can't show you videos that have winning trade after winning trade. How many times do we look at a report and we have lots of winning trades? And we'll go, okay, yeah, maybe the last month wasn't so great or the last 2 aren't that great, but hey, I have 3 winners in this collection of videos. This report, GDP, has been complicated, whippy, and not winning. So, I've been working on building up our cash account. I'm not that interested in throwing away $400 to $500 on a report that we know has a high probability of being difficult. Okay. It absolutely has a high probability of being difficult. But here's the funny thing, but I would be willing to trade the trap in my prop account, because what's the worst that's going to happen in my prop account? I'm going to blow it up. I'm not losing very much personal cash. I just started trading this prop account. Um, and if it's a great trade, I'll make some money. So I'm willing to take a chance with the trap like this, but not in my cash account, because in my cash account, it's a $500 risk, possibly. Okay. So on the prop account, and this is all also part of the psychology that you deal with when you're trading live accounts, sim accounts, prop accounts. It's all different psychology. So I think for this report to really have an opportunity to be a profit, it has to be, we looked at the spike sheet, right? We looked at the spike sheet. And I think if we get, I'm leaning 45 and 65 with a stop of 20. 45 and 65 with a stop of 20. If it goes 87 ticks, we'll get stopped out. Okay. I would get stopped out if it goes more than 65, the outer tier, plus 20, the stop. Okay. The time of the event is 8:30. If you're trading the trap, it's 8:30. And the prep is 5 seconds. Okay. The prep is 5 seconds. And look, it's also possible, maybe there won't be a fill. That's possible too. It's possible that there won't be a fill. Anything can happen. Maybe this won't be as big of a move as we've been getting as of late, because last month was huge. Over 125, there was 125 ticks. Very unusual. Okay. So my GC trap, I'm willing to give it a shot. Let's look at what would you do. The other trade that we tested, and when I tell you I don't like the behavior of it, I'm really telling you the truth. I did not like the behavior on the NQ breakout on this report. It whipped over and over on my testing, and it did not look like a report that I wanted to trade real money with the NQ. And I want to trade. I don't want to not trade these reports. I want to trade them, especially when we're streaming. Okay. But one of the things we teach our members, for everybody that's out there on YouTube watching us, if something is too risky to trade, then we recommend don't trade it. That's know what the risk is. And this particular report, you saw the videos, one after the other. They're just constantly whipping back and forth. Now, the NQ is a 35 bracket with a 35 stop. Absolutely, I would use the target one stop move, right? Break even -3 or 4 or 5. The reason you use that is if it changes direction and you hit your first target, it might protect you for the profit if it doesn't whip so fast, right? It could whip very fast. It's possible. So a 35 bracket targets, we've got between 10 and 40. And I would lean towards the smaller targets on this report because of the whip. Sometimes when you go for the smaller targets, you have a better chance of hitting them. When you get greedy on reports that are whippy, sometimes your targets won't get hit, but the smaller ones might have. And then I would still check my brackets. And look, we all know we could get a perfect, got to label the report, we could get a perfect response to everything today. But this particular report has not been trading that way month after month. It's not like one time, right? It's not like one time. It's been over and over. All right. So I'm saying this report has a lot of risk if you want to trade it. That's what I'm saying. Let's check our time sync. This is a good possible report to do set up a reversal. You know, I've got two different reports, two different setups I'm already doing. So I'll watch the NQ. Probably won't have time to catch a reversal. You know, you can put a reversal on the gold side, but it's a lot of risk also depending what happens with the trap. Traps usually take time to resolve, but so let's say we did have a reversal. You have a position and a target, let's say 30 ticks and a stop of 20, so that, you know, maybe the trap won't fill, account warnings are off, maybe you'll see something that lends itself to a reversal. So I'll just have it set up there. So you can have, now it creates a lot of buttons, so I'm not going to do my reversal till after the trap. The trap, you know, may need to be managed, okay? The NQ, that trade pretty much should take care of itself. If it doesn't whip, then it'll hit the targets and take it out of the trade. And if it's whippy, it'll probably hit target one and then hit the stop after it gets moved on target one stop move, right? Remember, we're moving the stop to break even -3. And I'm watching the news and listening to the news in my headset. To hear what the GDP is. If the GDP is huge, again, it'll probably ruin the trap trade. So I've got the trap on my prop account at Top Step, which has not had a very good start this week. The bond report was painful yesterday. ZB had a bad fill. So yes, there's definite risk being taken here, but it's risk I'm willing to take because I'm not married to this prop account yet. I haven't spent time building it up, building it up, building it up, which changes the psychology. Right now, I'm just a couple of trades into this account. One minute. My gut feeling is that this is going to be a small move. That's what I'm thinking, not impactful, because everyone's expecting big impact. But that's just conjecture, it has no meaning. So what's going to happen is my tiers, if everything is set up properly, my tiers will show up on the right side, my orders. The brackets will show up on the left side for the NQ. Okay, here's our tiers. 3.2 on the GDP. That's a pretty solid GDP number. Pretty solid number. Now the NQ got filled, but it has that bad look. We'll see. Gold, virtually nothing on this report. I would not keep my trap alive. That's not, we didn't get the move. Okay. Did not get the move. See what I mean about this report? I did not think we would get, my gut feeling is that this is what would happen. Gold trap trade is canceled. NQ, exactly what I didn't want to see. Okay. And there is no reversal on gold if it doesn't have a big enough move really to reverse here yet. Look at the news. So GDP was 3.2, which is a pretty good number. I They have not been raising margins on GDP, John. They haven't been raising margins on GDP. I don't know why. I mean, after last month, let me show you the news. 2 seconds. Okay, so let's take a peek. Corporate profits, no news on that yet. GDP 3.2 versus 3.3. Okay. Still a good number, not a bad number. And then the index is up, sales are up. So right now the market, the NQ is pushing up. The market likes it better than it dislikes it. I suppose you could have used PP as an area to reverse on gold if you wanted to, right? You know, those areas of support and resistance are often areas where price changes direction after the news. It didn't have a very big burst down, okay, to make me all that interested in the change in direction. But the news is a tiny bit, the main major news, a tiny bit lower than what was expected. But PCE prices up a tiny bit. Maybe that's a harbinger of tomorrow's inflation report, which is a very important report. I think we'll get a lot of volatility on tomorrow morning's report. But look, my recommendation was I did not like the behavior of the NQ in my testing. Let's look at the video. Let's look at, before we do that, ZN. Bonds are now on 6, okay? So look, it looks like a similar chart to what we saw in the NQ. It went down, then it went up, okay? Euro probably moved on this report. You can count on that. Looks like the NQ in many ways, right? The yen moves on this report. So there's instruments that would have moved. Everything looks like it went down first and then popped up. Okay. The NQ could be a trap. Roz, the question with the NQ is you got to do all the testing and figure out what the tier should be. So that means you got to go back at least 4 to 6 months and do that kind of testing. And the NQ is very difficult for that type of a trade because the tiers have to be very big. And they change. They change. But it looks like most instruments moved in a similar way to the NQ. MNQ. Did anyone trade anything? Who traded? Who traded? Any question? Anybody out there who traded anything? Anybody? Just curious. Anyone? And look, I'm not, no harm done trying the trap, okay? Nothing was lost. It wasn't a big enough move. So nothing lost. Misty, I would assume you lost money on the MMQ. Chantal, how did you trade it, Chantal? How did you trade it? You couldn't have traded it the way our DMM was. So Chantal, I'm guessing that you traded a reversal, right? Let me render the video. It'll take a minute, not even a minute. Right, okay. So look, the DMM was not safe. I mean, and looking at the history of the report told me to just avoid. That's how I would have done it. So Lewis, what setup did you use? China is HG. China is HG, Bruce. All right, let me show everyone the video. HG, it's probably 524. We'll double check. What's today's date? 28th. All right, let's look at the video. HG is copper. Yep. It's a proxy. It's a long story, but there's not a great instrument. It's going to be HG 524. 524. Definitely. It's a long story. Not a great instrument because the broker, NinjaTrader, doesn't really support the proper exchanges to trade Chinese news, unfortunately. So we use copper as a proxy. It's okay. Not the greatest mover. Okay, let's take a look at the video. And I want to thank everyone on YouTube. Chantal, if we want to close YouTube, we're going to close our YouTube chat, everyone, or stream. Thanks for watching. And if you hit the notification bell, you'll know when we're streaming again next week. We stream once a week. So thanks very much for watching us on YouTube, and we'll see you.